Let's talk about dividends. Are they safe given all of the uncertainty in businesses around the coronavirus?
No, they're not safe at all. Liquidity is the main issue now. We don't know how long the virus is going to continue and the impact on the global economy. So companies need to take steps to maintain their liquidity. Short run, they can deal through it. There's enough cash there and liquidity in general within the higher caps. However, if it continues, dividends are not as high as a priority as the company. You mentioned buybacks. They're on the back burner now. Again, liquidity is now king.
All right, so if liquidity is king, that must mean, I mean, there's a certain large segment of the investing population, Howard, that looks to company investing because of those regular dividend payments and dividends that actually increase over time. When it comes to who will actually cut dividends, what types of industries, what types of companies are the ones that are the weakest in terms of maintaining their dividend payments?
Well, obviously, those that are impacted the most by the virus itself. What we're seeing currently are the companies that are currently impacted the most, and their cash has been cut off, and their earnings have been cut off in sales. The usual ones within consumer groups, anything travel related, anything hotels. These are the ones that are hurting the most. We've seen about 61 companies month to date actually do cuts, and suspensions are more prevalent than cuts. That's because the companies that are currently being hit need to do it right away. It's not a step-by-step motion. On the broader market, we expect to see also cuts, but not as many suspensions, mostly because most companies can live through the shorter term. The talk of potentially opening up during the summer, or at least starting to open up, is a positive item, which companies feel that they can live through the dividend payments for this quarter. At least at this point, if it goes on longer, there's a situation.
All right, so let's talk about whether it does possibly go on longer. There are companies out there that have a long track record of paying and actually increasing their dividends over time. Take us through those types of companies. Is there a commonality among them, and are they better places to look towards for maintaining that safety of dividend?
Well, if you look at those kind of companies, obviously you can use something like the Aristocrats, which are 25 years in a row. However, you take a company that has about 10 years in a row. Typically, that's enough. It's become part of their culture, part of their spiel, shall you say. It's to return money to shareholders, and typically they do it at a set point in time, a certain month, based on the board meetings, with now being a very strong time period to do it as earnings will start to come out. Companies typically reduce the amount that they're increasing. In other words, they give a smaller increase, but they give them during good and bad years, 2008, 2009. By the way, 2009, we saw that 17% of the overall market dividends, 14% within the S&P 500. But the aristocrat type of companies continue to pay, although they reduce the amount that they actually do increase each year. So you're getting something.
Sure.
As long as the duration of this is not too great, they can live through this time period again. But if it starts going farther than that,
right,
they're going to have the difficulties.